Good afternoon, traders. It's Bill Baruch with Blue Line Futures, and it's your midday market minute. What was a full-blown trade war overnight has seemed to be a little de-escalated now. The S&P is back above 2,600, back above that 200-day moving average of 2590. But the low, the S&P traded down to 2559 early this morning, but has recovered. We had comments from Larry Kudlow, comments from Wilbur Ross. Everybody really trying to, again, de-escalate the situation. But overnight, the panic was in full force. We talked about this day after day, and we feel that this is a little bit of an exacerbated move. And we feel the market is in a sell first, ask questions later environment. That's what you get when this happens. So right now, we do think this is a bottoming action. And what was a very poor looking S&P chart on Monday, today's positive turn and retest down there can turn this thing to look pretty well, actually. If we get out above yesterday's high of 26.17, 26.18, we get out above there, this thing could really run. We wouldn't be surprised to see another 20 points on today's session if it gets out above that level. We had a third tier of resistance on yesterday's session right at that level, and the market failed to hold it and get out above there. But again, a retest today after trading down and holding a higher low would run 20 to 30 points, I think, before the end of the session if we get out above there. Moving on to crude oil, a bullish inventory report. We did start to neutralize our bias yesterday. We got bulled up again today as we felt the crude oil market had been sold off again with the equity market, an exacerbated move. You had a trendline support down there just at the 62 area, and then we had an EIA inventory report, bullish read, a draw of 4.6 million barrels. You had the products near in line with expectations. However, a big build on Cushing is starting to hold back things on this rally, but we're back above 63. Solid resistance at 63, 70s to $64. If you played this thing long today, you do want to capitalize against that level. Lastly, we'll touch on gold and the dollar. Gold traded higher through 1350 overnight into this or early this morning, and it's back down to 1340. It really, as that S&P, as the trade war situation de-escalated, gold has taken it on the chin. Even despite bad numbers from ISM non-manufacturing, factory orders, durable goods, all of it missed, but it really didn't matter as the de-escalation of the trade war kind of came into the picture. But we love gold. We think gold is going to continue to make its way higher. These gyrations back and forth are really what's going to build for this bullish breakout. We'll be talking more about gold on CNBC Trading Nation later today. Check it out. And lastly, the U.S. dollar is seeing some pressure from the poor data, but it's just not falling apart. It looks like everybody's really waiting for that jobs number and Fed Chair Powell who talk on Friday. Give us a call. We're here to talk about all of this. 312-278-0500. Email us info@bluelinefutures.com. Remember to sign up for a free trial of our research on our website. And remember, futures trading involves substantial risk of loss and is not suitable for all investors. Thank you.